Good morning. It's Tuesday, the 10th of September, and this is Govindraj Ethiraj, headquartered in broadcasting and streaming from Mumbai, India's financial capital. The Take. Here's a quick quiz question. How many Indian institutes of technology or IITs are there in India, and where are they? Chances are you could say Kharagpur, Kanpur, Delhi, and Mumbai. That's Bombay, and maybe Chennai. That's Madras. That's 5 if you've got them all. There are actually 23 IITs in India now. The first was set up in 1951 in Kharagpur, and there was some gap between the first 5 and the 6th. By the way, there are also 25 triple ITs, or Indian Institutes of Information Technology, some well known and some not, and also occasionally confused with IITs. Next question, how many Indian Institutes of Management do you know of or can recall? I'm guessing Ahmedabad, Calcutta, that's Kolkata, and Bangalore, Kozhikode. Maybe. And then, well, there are 21 IIMs now in India. And last question, how many All India Institutes of Medical Sciences or AIIMS do you think there are, and can you name them? Well, most I think would name the AIIMS at Delhi and then nothing else. Unless, of course, you live next to one. But there are 23 AIIMS in India, of which some are under construction still. A promoter of a steel company in the state of Maharashtra once told me that industries in India can go to overcapacity very quickly, so much so that it becomes uneconomical and unviable for everyone very soon. This includes, by the way, television news, where there are close to 390 news channels, and it's a recurring mystery how they survive, even accounting for vanity capital. It didn't strike me until Shantanu Rooj of TeamLease Edtech, who joins me later in the show, pointed out that what we could be seeing now is perhaps the early signs of overcapacity and brand dilution. Do note that I'm not arguing against more medical engineering or management seats, but the clubbing of them under the IIT or IIM brands. By the way, do you know how many B schools there are in India? Well, that depends on who you ask, because the answer, as I saw, could vary anywhere between 3,000 and 6,000. I once asked a senior professor at an American Ivy League college why they were not expanding into India. He explained at that time that while they were exploring campuses in a few locations and would like to go to India if regulation permitted, it would always be clear that these campuses were satellites of the main institution. His point, in a larger way, there can be only one Stanford, Harvard, or Columbia. Admittedly, the nature of education delivery has changed in recent years. The Ivy Leagues now have several layers of offerings ranging from online and offline or hybrid executive programs to entirely online programs. I've often noted, by the way, certificates with the Harvard Business School logo hung on the walls of office cabins of people I've visited, which on closer inspection turned out to be an advanced management program and not the full degree. I'm not saying there's anything wrong with that. But this deluge of options has not, at least in my understanding, diluted the core brand and proposition. Possibly also because there is careful delineation of courses and offerings, even as more students are sought out. Or the original brand can withstand some dilution thanks to growth because it's been around for a few hundred years. Whatever the reason, it's clear that the Indian institutions, being the IITs, IIMs, and AIIMS, are seeing a dilution, though arguably the original few still stand out because of their strong faculty, research strength, and of course body of work. For example, which IIT's civil engineering department do you think the government calls if they want a second view on some engineering-linked issue, like a collapsed bridge? I'll leave it to you to answer that. The way forward, perhaps, is to do a proper brand audit, including performance audit of these newly minted colleges, both from a student and prospective employer point of view. It does not seem somehow logical that institutions of learning can be replicated at such scale without compromising on a host of factors. Institutes of learning are not assembly line automobile factories, which can be replicated and expanded almost with a push of a button. And that brings us to the top stories and themes for the day. The stock markets recover but stay on a weak footing. Morgan Stanley cuts oil price projections once again. A cut in gold import duties could boost domestic business. Iron ore prices fall below $90 a ton. And it's thumbs up for the Indian market as French retail giant Carrefour returns after leaving in 2014. And why placement salaries at the IITs are hitting new lows.
This is the Core Report with Govindraj Ethiraj.
The stock markets recover on a weak footing. The stock markets recovered from that drubbing on Friday, tracking in anticipation of recovery on Wall Street overnight. On Monday, the Sensex and Nifty closed higher, even though Asia was down following the Friday fall on Wall Street. The Sensex seesawed a bit before closing up 375 points at 81,560, while the Nifty 50 moved similarly before closing up 84 points at 24,936. The bigger news, of course, is what's happening in the primary markets. The Bajaj Finance IPO was oversubscribed on day one. Perhaps no surprises there. Yesterday, we spoke of what could happen if companies and promoters get too greedy and extract more from investors than they can stomach or are unable to meet their expectations. Well, in that case, both primary and secondary markets could turn weak, as has happened before. Meanwhile, Pranav Haldia of Prime Database told Business Standard the Indian markets were on track for the best ever IPO year, which is, of course, good news for the companies that are raising funds, but a tad worrying given that we don't know, once again, how much the markets can truly absorb. During the first 8 months of this year, 50 IPOs pulled up about 53,000 crores, which was higher than last year's roughly 50,000 crores. 2021 was apparently the record year for IPO mobilization, totally raising about 119,000 crore rupees, though within that there were a couple of large big-ticket IPOs. But investors in 2021 were not investing so heavily in mutual funds or in derivatives or in secondary markets, is my sense. So how things could pan out from here on is something that we have to see. Oil prices are projected to stay low. So Morgan Stanley has reduced its Brent crude price forecast for the second time in a matter of weeks as demand challenges mount while supplies remain plentiful, according to Bloomberg. Crude prices could average $75 a barrel in the fourth quarter, according to a note from the firm's analyst. That's the calendar year. Overnight crude prices, meanwhile, were quoting under $72 or about $71.57 a barrel. Morgan Stanley last month projected $80 a barrel between October and December, which in turn was a pullback from its earlier outlook of $85 a barrel, according to Bloomberg. So now crude prices have dropped to their lowest since late 2021 on consistent signals of weaker Chinese demand and the possibility that the US economy is slowing. And by the way, prices are holding low despite the Organization of Petroleum Exporting Countries, OPEC+, to defer a plan to increase output, which means they will not increase output as they had earlier promised, precisely because prices are not rising. Cut in gold import duties could boost domestic business. Revenues of organized gold jewelry retailers could increase 22 to 25% on year this year, that's the financial year, much higher than the 17 to 19% expected earlier, according to a new report from CRISIL Ratings, which means that you and I will buy more gold jewelry this year. Now, this, of course, follows a reduction in import duties, a sharp one announced in the full union budget 2024, which, of course, as we've discussed here, was important and necessary because high import duties were only leading to more smuggling. The incremental growth will be driven by higher volumes even as retail gold prices come down from their lifetime highs, CRISIL Ratings said. And now from a gold jeweler's point of view, the sudden price fall could also lead to some inventory loss in existing stock, though its impact could be mitigated somewhat as improved demand would reduce the pressure on spending on marketing and promotional campaigns, according to CRISIL. By the way, CRISIL Ratings analyzed 58 gold jewelry retailers who account for about a third of the organized jewelry sector in revenue terms, which in turn represents a little more than a third of the market, with a highly fragmented, unorganized market making up for the rest. Before we continue, a short break. With a significant rise in cyber attacks, particularly ransomware, cybersecurity has now more than ever become a very important facet of the digital economy. The Data Security Council of India, or DSCI, plays an important role in building India's cyber defenses by working with both government and industry. How has AI, or artificial intelligence and machine learning, impacted cybersecurity, and what's the current state of the cyber insurance market? And how can we foster and support more innovation in this fast-evolving field? Vinayak Godse, the CEO of the Data Security Council of India, joins me to answer all these questions and more on the latest episode of our series, NASSCOM Conversations, in partnership with NASSCOM. And you will find the link to that episode in the description. And now, back to our show today. Inflation numbers could trend lower. India's consumer inflation numbers, or CPI, could drop to 3.5% according to a Reuters poll, and thus below the Reserve Bank of India's 4% medium-term target. A moderation in food prices, also linked to last year's high base, could help. Food prices, which make up nearly half the inflation basket, have already eased in the last 2 months, though the threat of erratic monsoon rains harming crops remains. The September 4th to September 9th poll of 53 economists has forecast consumer price inflation at 3.5% in August from a year earlier. Iron ore prices fall. Iron ore prices have now gone below $90 a ton for the first time since 2022 as Chinese demand faltered further. The fall in iron ore should also be seen in the context of other commodity prices declining, including base metals and crude oil, which we just spoke of, according to Bloomberg. Goldman Sachs last week reduced its copper forecast by about $5,000 a ton after projecting $15,000 a ton the next year. The current forecast is about $10,000 per ton, and prices had hit about $11,000 a ton in May. Consumption of steel, for which iron ore is a key raw material, has slowed thanks to China's protracted real estate slowdown. Carrefour returns. Now, this does not happen often. The roughly $100 billion French retailer Carrefour will re-enter India as it has entered into a franchise partnership with the apparel group. The brand will apparently focus initially on North India with plans for a nationwide expansion. The first locations are planned to open in the national capital region, that's Delhi, and around that in 2025, that's next year, according to Reuters. Carrefour had exited India in 2014 after operating for 4 years. Carrefour is one of the world's largest retailers with 14,000 stores in close to 40 countries and had previously tried to enter the Indian market through a partnership, although with another retailer. Placement season blues. Placement season has not been very good at IIT Bombay, with some packages dropping to as low as 4 lakh rupees a year, though the average annual package stood at about 23.5 lakh rupees a year, higher than last year, according to a report in the Economic Times. Now, the placement percentage recorded is apparently around 75%, unlike higher numbers in previous year. A similar story played out at IIM Ahmedabad's one-year PGPEX program, usually for students with work experience, with a maximum earning potential, as they call it, dropping to around 54 lakh rupees a year, which is a 6-year low compared to a high of around 1 crore rupees last year. So what are the broader trends here, and how is this reflective of the overall job market, and where is this headed? I reached out to Shantanu Rooj, CEO of TeamLease Edtech, an upskilling and training company, and I began by asking him what was going on.
Govind, actually, these numbers are really accurate. I mean, today we are talking about it, and this is coming in the limelight because IIT Bombay spoke about it. But the issue has been there for quite some time now. If you look at the trends right from 2019, for example, just before COVID, and maybe a few years before, most IITs have been seeing a declining trends in terms of their campus placements, their success rates, as well as the packages. Obviously, during COVID, there was a temporary bump up, but then actually it's coming back to that. I think that this is a trend which is there with most IITs as going to stay.
And what is driving this?
So this problem is an animal with two heads. One side lies within the IITs. There are certain challenges in what is being taught inside IITs and how are they being taught, right? So the curriculum hasn't seen a lot of modernization at this point in time. Number two, even the pedagogy hasn't gone through a lot of change. Most IITs today still teach students inside physical classrooms. That's a challenge. Today, employers demand a lot of evidence of skills, evidence of work experience, evidence of internships, apprenticeships. They're all lacking. I mean, I think that has to change. If you look at it from the employer's perspective, number one, the number of IITs today have grown. A few years back, we used to have just about 6 IITs. Today, we have approximately about 25, 26, which means that they are not that coveted lot. Only few of them are available, and there's a demand-supply challenge. Today, there are ample number of IITs and ample number of IIT graduates available, number one. Number two, the global problem, the turmoil that we all see, the geopolitical, geoeconomical situations, actually is also driving some part of the temporary blip for sure. I think it's a two-headed animal.
And is this something that applies to B schools? Because we also saw reports that placement packages for IIM Ahmedabad's PGPX, that's the one-year MBA, was down by almost half.
Yes, there is a trend there too, but I'm not too sure that these two trends are interrelated. The packages problem at the B schools largely is because of the global situations today, and that the large multinational, large global companies are not hiring or not willing to pay the packages that they used to pay earlier. The reason behind that problem in the B schools is different from what's happening in the IITs.
So coming back to IITs, now this obviously, if it's IIT, then it also extends to other engineering colleges because there are lots of other good colleges and then there are other engineering colleges.
That's true. But then if you look at it, most other engineering colleges apart from IITs already had this. For example, look at a typically category 2 engineering college. The placement rates was hovering around 60-65%. That must have come down by a few small percentage points. So the disappointment is not that high because you didn't expect 100% placements. Whereas in IITs, we expect 100% placements, and we are all sometimes startled by the type of packages that we all hear, right? A crore plus packages given to the top 10, 12 students. We possibly miss out what's happening to the bottom 10%, bottom 20% of the students. I think the disappointment is more in the IITs, where the fact is similar in the other engineering colleges as well.
So there are two components. One is the compensation, which at least at the lower end clearly has dropped or seems to have dropped. And the other is jobs. So are you saying that both are a question? I mean, even if, let's say, compensations are down, is everyone getting a job? I mean, one is the IITs and then all the other colleges?
It is. I mean, both are wrong. In terms of one is the quantum of the compensation has come down. But in terms of the jobs, I think there are lesser jobs. But most IIT students aspire to end up in an IT company or in a consulting company or some other AIIMS. So that's their aspiration. Most engineers coming out of the IITs do not want to enter core engineering. A civil engineer still wants to go to end up into one of the top IT companies there. That's a challenge. If the engineers actually reconcile to the fact that if I'm a mining engineer, I must end up in that industry. If I'm a civil engineer, I must end up in that industry. Then there are ample number of jobs. I mean, Indian domestic consumption story is true. I mean, the manufacturing growth in India is actually true. So I think there are jobs available. The type of jobs which meets the aspiration of the students, I think that's where the...
So how do you see this evolving, Shantanu, in the next couple of years? I mean, also in terms of what students should be doing or how they should be aligning themselves with job market?
So Govind, in my mind, this is not a passing shower. This is climate change for the placements in IITs. This is going to stay forever unless we change ourselves. Students must ensure that their CVs are brimming with evidences of work experience. They must pick up all possible chances or all possible opportunities to take up project work, internship, practical hands-on experience, and most importantly, soft skills. This is one thing which IIT engineers really, really lack. In their interviews, most employers have told us that some of the students where they showcase a lot of technical skills when it comes to communication, teamwork, when it comes to the way they present themselves, the personality, the grooming, all of these things really sucks. I think that's where there is a lot of room for improvement.
From your time, you're also an IIT graduate, as I can see. What's fundamentally changed or not changed? You talked about syllabus and curriculum, which you said is not changed, but what has?
One is the entire world of work has changed from what it used to be. Expectation of employers 20 years back was very different from the expectation of employers today. Their world of work is actually getting disrupted by everything that we have been talking about all this while. Employers are so uncertain about their own future, they are not sure what type of people they should actually hire. So hence, the premium for a technical skill is now coming down. Employers want people who are more adaptive, people who showcase learnability, people who can showcase a combination of hard skill and a lot of soft skills. Satya Nadella famously talked about it a few weeks back, saying that in most of the Microsoft interviews, they are looking at soft skills as importantly as hard skill. I think all of these things have changed. That wasn't the condition 20 years back.
Right, Shantanu, thank you so much for joining me.
Thank you so much for having me.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.